All right, welcome back, everyone. This is Bob Maurer. It is Wednesday, the 24th of July, around about 1:20 my time. Want to do an update of the current seasonal futures, spreads, strategies, review how things are going for those few that we've been looking at for a short time here, and then also introduce a couple new ones for you. So let's hop on over to it, see how things are looking. Down into the portal, you'll see the PDF version right there. We'll grab it right here. So this is for the week of 7/21 this week. And here's what we are sitting with. We've got 311 top row, rough rice futures, 312 WTI light sweet crude oil, 313 feeder cattle. Doesn't look like it's filled yet. These two look like we should be in. And then the bottom two are the new ones I'm introducing. Got a beer spread in live cattle, number 314, and number 315, a bear spread in the natural gas futures. And this one will get benchmarked today, so we need to wait for today's close, and then we've got the input information for the entries and the exits here. Okay, so let's hop on over to the charts, take them one by one. Bear spread, rough rice, number 311. And we want this thing to break down to negative 29 at a minimum, maybe even negative 33 half. We are just about past the halfway mark in this seasonal window. So we need this thing to start working its way lower. It ends on Augie 3. So we need to see a push to the downside. Really been kind of quiet, right? We had this good little slide to the downside here. Then we had about a month's worth of sideways action in about a 8-cent range. And then we took off lower, reached a new low trading zone. And this one is about negative 26 to about today's high of negative 19. So about a 7-cent range. And it's been kind of choppy over the last few weeks since the start of the seasonal window. But we just need this thing to fall back and take out this low, and hopefully that'd be enough to get this negative 29. So only ones that are in at this point are the more aggressive averaging type of traders. They're in an entry level 1, which is somewhere around the benchmark at negative 24 half. And then the level 2s are sitting up there at negative 15 half. They're not filled yet. So no change to the strategy at the moment. The entry level 1 traders are in and are currently sitting with some level of unrealized loss. And we'll just have to keep an eye on this one, see how it trades over the next week and a half until it times out. And just one little note, I do watch these as I walk them forward. And this little sideways move, for the most part, in my opinion, based on the data, is not unusual. Typically, within the next few days, you do start to see a slide to the downside. So maybe it's just taken 2-3 weeks for this thing to kind of follow along that pattern. Hopefully, it would have been nice if we got the negative 15.5 level, but in the short term here, at least the entry level 1 is filled. And again, typically, based on my analysis, this is about coming up on when the market should see its resumption to the downside. So we'll see how that plays out, if that plays out. All right, and then we've got crude oil. So this is strategy number 312, bear spread in the WTI light sweet crude. And it looks like both levels should be filled. If you did get filled at both levels as they are on the chart here, the 61 price and the 69 price, then obviously your average is going to be 65. It's been working pretty good, right? We had this little pop-up here on the 4th day into the window. Then we had another pop to the upside, taking out that swing high the 6th and 7th day of the window. And then this one here, bit of a failure with the market pushing into new highs but closing at the bottom of the range. Well, not really. Middle of the range, but didn't close with a new high. And then it pushed on down, touching almost this white line, which was the 200 period moving average, which came in at 49, and we got to a low of 51 yesterday. So market found a bounce out of there and then popped up a little bit, but again, showing some weakness today so far. No change to the strategy. Both levels should be sitting with some level of unrealized gain. Looking for 45 and 28. 45 is below the 200 period moving average, so it might, like over here, take 3-4 days trading around it before it pushes on through. We'll see how it plays out, but plenty of time left in this window. So all going according to plan so far on that one. And then feeder cattle. Strategy number 313. Really long window of opportunity here, right? Goes all the way through the beginning of October. And it's basically been consolidating roughly between, let's call it 25 cents and negative 37. So about a 60 some odd cent range there. It's 240 bucks. We need this thing to have some kind of catalyst to push it up and let us in at the 77 level, which is our entry level 1, and then 2 is up top there, about 50 cents higher. No fills yet, no change to the strategy. We'll see how this one plays out. Really long window of opportunity. My hunch is they're probably it's likely to maybe get down to this first target before it rallies up. If that's what actually happens, then we will reassess and see if we want to stay with this one. Okay, so as of right now, no fills, no change to the strategy, moving sideways in about a 60-cent range. Two new ones. Live cattle futures, also affectionately called fat cattle. Don't tell your cattle that. And I'm just going to briefly introduce it because I'm also going to post another video that goes into a deeper dive. Looking to get short, first level was entry level 1, which is where it was benchmarked on day 0, which was negative 192.5. It actually started a few days ago, so you can get in it better. Second level would be negative 142. Stop is negative 87, and then we got our targets down here. Essentially, more of a range-bound trade, right? Anywhere, let's call it from negative 245 to negative 140, so about a 100-point range, give or take, over the last few months. And we want this thing to stay in that range. So we want to see a push up and then a push on down and actually work its way into a new low territory. So we'll see how that plays out. So that's number 314. You can refer to the PDF and it'll have these levels. So it'll be easier for you to have at handy when you go to place your orders by your trading platform or trading desk or whatever you use. Okay, so that is 314, bear spread live cattle, introducing it. Oh, and by the way, it's the Feb versus the April. Feb versus April. So it's a bear spread in the deferred contracts. All right, and then we got netted gas, number 315. Another bear spread. Looking in yellow here, long January, short December, margin requirement, a reasonable 212 risk reward. Risking 170 for the more conservative entry level 2 traders. Risking 170 either make 440 or 550, and then the more aggressive average in traders risking 460 per 2 lot that you average into. Either make 760 or 980. All you do is get level 1. Game would be 320. Similar to the cattle, more of a range-bound trade, and we want that to work in our favor. We are looking to get short. Price improvement on both of these. We need to wait till today's close. And then once we get today's close, disregard that negative 272. Whatever it turns out to be. Right now it's at negative 273. Then we're going to add 9 for our entry level 1. We're going to add 21 points for our entry level 2. We're going to add 38 points for our stop. And then for the targets, we're going to subtract 23 and 34 respectively. All right. So we're looking for this thing to pop up, get towards the top end of the range, and then break on down into new low territory. That's number 315, net gas bear spread, long January, short December. All right, so I think that brings everything up to speed. We had the 3 ongoing spreads. We've got the 2 new spreads. I think everybody should pretty much know what we're doing next. And as I mentioned in when I was going through those, the ongoing spreads, pretty much there's no change. Maybe some are filled, some are not. And we'll just have to give it some time to see how things work for us. All right. So I'm going to leave it there. And thanks so much for watching.